Hey guys, Max here, and this is your daily market update for yesterday, Monday, the 13th of December, first day of the week. Of course, the markets were open and they were pretty volatile. We're going to look at what actually happened, what markets are pricing in, so why what happened. We're going to touch on Elon Musk and a couple other things, so let's just get right into it. So of course the markets had a pretty bad day. The S&P 500 was down 1%. The Nasdaq was down a little bit more, 1.3% I think it was by the end of the night. And big tech was down as well, with Tesla and Apple dropping around 5% each. Now actually the entire tech sector, Nasdaq basically didn't do well, as is obvious. Travel, cruise and airline companies dropped a lot too on Omicron fears. Crypto had a bad day as well, with the big coins, Bitcoin and Ethereum, dropping around 5%. But the altcoins had a much more volatile day, losing around 10%, and some of them even dropped as much as 20% yesterday alone. Now, what really happened is that the consensus of what people are expecting to see changed over the course of the day. Basically, the markets are now fearful of a Fed taper again. They're going back and forth constantly. That was literally a 180-degree turnaround over 6 hours. But at least the markets make sense this time. They are expecting the Fed taper to accelerate maybe as soon as next month. They're expecting rates to rise in early 2022 as well, so an accelerated rates rise as well, which is actually quite reasonable to expect considering how inflation is and how low things like unemployment are. But there is a major problem with this, and that is that markets are now pricing in a hawkish turn, so they may rally on the Fed's announcement this week, even if it is hawkish and bad for the markets, and it just might not make sense again. Fears of a tech bubble like we saw in 2000 are growing and getting more mainstream as more and more people are drawing comparisons to the dot-com bubble to today. The S&P 500's long-term PE ratio is sitting at about 37, which is the highest we've seen it since the peak of the dot-com bubble. Only 1/3 of Nasdaq companies right now are trading above their 200-day average, which means that 2/3 of Nasdaq stocks have been falling in value over the last 200 days. This is obviously very reminiscent of 2000, where we saw the most overvalued and overhyped companies like Pets.com fall first, and then they dragged down the more blue chip overvalued companies, and then they came down for the value companies and the rest of the markets as well. Now, inflation fears are getting worse, not better. There is a lot of flack coming out for the Fed for manipulating data, specifically regarding housing costs. Rental prices, according to the US's largest landlords, are up 17% this year, but under the Fed's CPI data, they only really account for 5%. CaseShiller, an index which measures the changes in single-family home prices across the US, are up around 20% this year. And again, those price changes aren't measured or included in CPI data. If the CPI were measured as it used to be a few decades ago, then inflation last month would have been sitting above 10%, which is obviously quite scary. Lots of people seem to be acknowledging the fact that CPI data and the way it's measured has changed over the years, but not many people are actually going through and remeasuring it as it used to be done. But now people are doing that. They're seeing that, yep, the situation's bad, just as we expected. Now, Amazon, the company, and its stock is down about 3% on the pretty awful news that 6 of its workers died in that Amazon warehouse after the tornadoes hit. The company has gotten loads of bad press from this. They've gotten loads of flack coming from people on all sides of the spectrum. Amazon already had a bad reputation as an employer, overworking their staff, forcing people to urinate in bottles as they aren't allowed to take some bathroom breaks and things like that. And it turns out that at this warehouse, employees were not allowed to have their phones on them while they were working. Now, when the warehouse collapsed, people got stuck inside, trapped under rubble. Of course, 6 people died, so this was really serious, but no one had their phones on them to try and get help or to let people know where they were if they were stuck or wounded. This is pretty awful, and Amazon's policy is going to get absolutely destroyed over this. They're already being investigated by OSHA, and I really wouldn't be surprised if they get hit with some fine for something like this. Sentiment regarding the stock could drop quite rapidly. The price already has fallen, and if Amazon gets into more trouble for this, you can expect that volatility to continue. Now, meme stocks we haven't really looked at much because they haven't been that popular of a topic recently, but they just had a really bad day and they're back in the news cycle. An index of meme stocks made and run by Bloomberg shows that they are at their lowest price over the last 7 months. AMC is down 22% this week and 15% yesterday alone. GameStop is down 21% this week and 14% yesterday alone. Now, the performance between these two companies, obviously the two biggest, most popular meme stocks, is very weird, and it's caused some accusations of wrongdoings, manipulation by market makers or hedge funds. Now, to be perfectly honest, it's very hard to know exactly what's going on at this point. It could just be selling pressure due to risk sentiment changes, but it could also very feasibly be shady doings from these big institutions, and I really wouldn't be surprised if that was what it turned out to be. To be honest, there is so much nuance at play here, so if you want more context, I'll link a thread down below in the description for something for you to read if you want to find out more, but that's all I'm really going to cover today. I am thinking about putting together a long form scripted video summarizing this whole meme stock event, so let me know if that's something that would interest you. Now, South Africa have put forward plans to try out universal basic income, which is a pretty interesting place for it to start. Now, UBI, for anyone who doesn't know, is basically the idea that you have a low but consistent amount of income that every single person in the country gets no matter what. And then if they want more money, they can go out and work for it. Now, there is a lot of hype around UBI. It's very popular, especially amongst people on the left side of the spectrum. Personally, I worry about the incentive to work being destroyed by it. Workforce participation is already at all-time lows, the lowest points in the entirety of human history, and this will probably push it lower. I just think it's a bad idea, but we do have to wait to see it on a bigger scale. Lots of people will tell you that it's been proven to work, but the truth is it hasn't. We haven't seen it tested with enough participants or for long enough, and it will be 10 or 15 years minimum before we really find out if it works. But in my opinion, incentive is everything. Profit motive is everything. 99% of the wealth in the world has been created by individuals and businesses, not handed out by governments, and I just think it's going to be a recipe for disaster, especially when we look at how much government spending has been increasing over the last few years, and with things like helicopter money just causing massive inflation across every Western nation over the last year since the end of the pandemic, with no real increase in productivity. I don't see it being successful. Now, Elon Musk has been named Time's Person of the Year, and I'm not too surprised by this. It's been a big year for him. He is the richest man in the world. Tesla has had a crazy pump. Dogecoin has had a crazy pump. SpaceX maybe even going public. He probably has influenced more people than anyone else this year, except for maybe Xi Jinping. Funnily enough though, and something that is a bit ironic and something that people have been drawing upon, is the fact that right before the dot-com bubble and the dot-com crash, Jeff Bezos was Time's Person of the Year. However, the year after, his stock Amazon fell by 95% in price. Reality is sometimes funnier than fiction. Would be hilarious if the same thing happened to Tesla next year, and it's not beyond the realm of possibility, but that's certainly not a prediction I'm making. Elon has also just sold more Tesla shares. He sold about $1 billion worth of Tesla yesterday, getting closer to that 10% mark that he said he was going to reach, but it's not over yet. He's probably going to sell some more over the coming weeks. Antony Blinken, the US Secretary of State, will seek to bolster outreach to the Southeast Asian countries to counter China's presence, and this is about time. It would have been great to see something like this when Biden came into power, but it's better late than never, I guess. At the very least, this administration does realize that China is a threat and an enemy to the West, and they're not completely blind to the issue. Let's just hope that US foreign policy can pick up where it left off. I know that a lot of people watching this won't like me saying this, but Pax Americana is a real thing, and it would be terrifying to see it disappear because of a weak administration. A company that I didn't expect to be talking about today is Harley Davidson, and that's because they are looking to list their electric motorbike part of the company through a SPAC and go public and capitalize on the EV frenzy. Now, this makes absolutely perfect sense. It's a good business decision from their point of view. I just don't think it's going to be anywhere near fairly valued, so don't get caught holding the bags. This company alone will probably be valued at far more than Harley Davidson themselves, with little to no justification, as we've seen with companies like Lucid and Rivian. But that being said, electric motorbikes are awesome, and if my mum wouldn't disown me, I would buy one in a heartbeat. Now that's pretty much it for the day. I'll see you guys tomorrow to cover Tuesday's news. This week is probably going to be pretty volatile with so many big announcements from central banks around the world and things like that, so make sure to stay tuned. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.